Okay, let's talk more about the payroll process. We went over last time how to compute payroll. Now what we're going to do is show you how to record it and report it also. So first thing we're going to talk about is recording salaries expense. Once you have your employees go through a pay period, you then need to journalize that information, updating your records to reflect the salaries or wages that they have earned. So the first thing we're going to do is complete the payroll register like we did for practice last time, putting in all the hours they've worked, how much pay they've earned, and then determining which part of it is taxable for the various taxes. So from that information that you compile in the payroll register, you then have to journalize it. Otherwise, your records aren't up to date. So what we're going to show you is how to journalize the information from the payroll register to update your financial records. Okay? So the salary and wages expense could be different names from company to company, so just be aware that look for something with those names in it. And expenses are debits or credits? Debits, always debits. So that's what we're going to debit. Now, once a payroll register has been completed, does that mean employees have been paid? No. Because are you usually paid as soon as you end a pay period? No. But we still record it. Whether you've been paid or not, the salaries have been earned. So again, they've been earned, so we're going to record it to update our financial records. So your net pay, or the amount that they're going to receive later, is going to actually become a payable. And what's a payable? A liability. Why would the net pay be a liability? Because the employees have earned it, but we're not paying them yet. So because they've already earned it, we can expense it, but we're going to make it a payable until we actually pay them. So it will be something called wages payable or salaries payable or something similar. A liability because they've earned it, but we're not giving them the money yet. Okay. So here's an example of a journal entry for payroll taken directly from the payroll register. Notice what the debit is. Wages and salaries expense. It could just be wages expense, could be salaries expense, or could be some other name that the company has set up. But it's some kind of expense related to payroll. Now, what does that entail for the credits? Which taxes are deducted from an employee's paycheck? Which taxes? Federal, state if you have a state tax, FICA, OASDI, FICA Medicare, what else? What else? Okay, so those are for taxes, but could be health insurance premiums that they have deducted from their check, in which case that would be a health insurance premium payable because we're not going to pay it yet for them, but it's going to be a debt that we're going to incur. Now, all of those together, all those deductions do not equal the expense because we have to add into it the amount of money they're going to actually receive in their paycheck. Their net pay. Net pay. Gross pay is the expense, and net pay is the amount they actually receive in their paycheck or the deposit directly to their account. So let's take a look here then. Salaries and wages expense here will be the gross pay for that pay period. Gross pay, meaning amount earned by your employees before any taxes. These amounts are the deductions from their checks. Federal will be by the charge. States usually is a percentage. OASDI or Social Security is going to be that rate we talked about. Medicare is the rate we talked about. And then any other deductions they may choose to voluntarily have taken will also be included here. And then after all those deductions are taken from your gross pay, the amount you get in your paycheck will go to something, excuse me, called wages and salaries payable. Okay, can you pause? Okay, payable is net pay for wages and salaries payable, net pay, the amount you actually are going to give your employees in the form of their paycheck. Okay, here's another example with some amounts shown. Now, you'll see some different expense accounts names still related to payroll. This one happens to be by maybe a specific department within the company. So there's payroll for plant workers and for office workers. So it doesn't have to go necessarily to one expense. It could be broken down by different buildings or different departments. But you can see that the payables are all still the same. All the deductions from the checks are listed as payables, included wages and salaries payable. Now, once that is recorded, then your records are up to date for your financial condition at that point. This does not include, however, actually paying the employees. Again, this is just recording the information from the payroll that has been earned. Okay, now when we're ready to pay your employees, you have to make a new journal entry. Take a look at what it is. We're going to debit wages and salaries payable. Why? You're decreasing the liability because you're going to pay for it. So you're going to get rid of the liability for wages and salaries payable by debiting it. And then what's the credit? All right. Now this may not be the case for all companies. What some companies will do is this. Instead of just crediting cash, the normal cash account, they will set up a specific type of cash account just to deal with payroll. It just is a good way to do a tracking system to make sure you have sufficient funds. But they will often name it this, payroll cash. What kind of account do you think that would be? Still an asset. It's just a separate cash account, strictly for the payment of payroll. For a lot of our assignments, we'll just be using the cash account. But if you look at your chart of accounts and there is a payroll cash account, it's used to pay for payroll. Okay? Now, let's quickly review these again from last time. FICA, OASDI, tax rate, 6.2% for employer. And the book will also have you do the same for employees. However, what is the current OASDI rate as of January 1st? 4.2%. So in actuality right now, we do not have to have 6.2% deducted from our checks, only 4.2%. And Medicare is 1.45%, both for employee deduction and for employer contribution. Is there a cap on that? No cap on Medicare. What's the cap on OASDI? 106.8 currently, but the book's going to tell you 102, because that's what it was a couple years ago. So for the assignments, use whatever it tells you it is. Now, FUTA and SUTA vary, but the rates will always be given to you. And what is FUTA? Federal employment tax. And SUTA? State. And who pays for both of those? Employer only. only. And do they have caps or limits? Yes. So you have to pay special attention to those caps or limits, and they could change. Now, employers need ID numbers for their business. So this employer identification number is assigned to them by the IRS. And an SS4 form is filled out to obtain this employer identification number. Now, these aren't things you're going to have to do for this class. This is just for information only. Remember, I told you you're not going to fill out those types of forms. Now, we showed you how to journalize the payroll from the register. We also need to learn how to journalize payroll from the employer perspective, because what do they have to pay besides the wages and salaries? Taxes, up beyond what they have to pay in salaries and wages. So here's an example of a journal entry for the employer part of payroll. And again, the first part is an expense called payroll tax expense. This is the expense used to record employer parts of the payroll process. Payroll tax expense. It identifies the taxes paid by the employer. And they include the same two that all employees have, the FICA OASDI and the FICA Medicare. So those are both also taken from the employer as well as the employee. FUTA payable, and what was that again? Federal unemployment tax. That is paid only by the employer. And SUTA payable is the state unemployment tax. So to record the liabilities or the tax liabilities for employers, this is the journal entry needed. Payroll tax expense debited for the total of all the payables shown. The FICA OASDI, the FICA Medicare, the FUTA payable, and the SUTA payable.
So this is obviously all the employees combined.
This is all the employees combined.
Now, if you have like salary and they're on monthly and then you have bi-weekly on the other ones, is it different?
No, you can just still do it. You'll still have the same paydays. But good question. So all the employees combined, one journal entry, you're done. Now, again, you're not going to have to fill out forms for quarterly reports, etc., but here's just some information regarding them. First of all, deposits are made for the tax liabilities. So you're not paying those taxes right away, but you're going to have to deposit them depending on how large your payroll is. So if a company owes less than $2,500 in total taxes, you only have to do a deposit quarterly of the amount of taxes that are withheld. Now, if they have more than that, then you're going to have to make deposits on monthly. But again, this is information only. You're not going to have to fill out these forms for this class. You will in the payroll class. Now, a Form 941 is actually part of the next mini practice set. It's a quarterly payroll form, which you will not have to complete. I'm going to emphasize that enough. I've put it on the instructions. You do not have to complete this step, but I'm going to tell you over and over again, you do not have to complete a 941 in this class. You'll find information in the chapter on it, and you can read it and you can understand it, but you will not have to do that in this class. It's just information only. Heather? You will not be tested on it, although there could be questions just related to the form itself saying, what do you fill out for a quarterly tax return? So identify it as a Form 941, but you do not have to know how to complete it. Does that make sense? Okay. So on the midterm, no. On the final, no Form 941s. Now, you will, however, have to do some journal entries regarding some of these taxes we've talked about. So, remember when we recorded the FICA OESDI payable? When we recorded everything from payroll? Whenever we debit it, what does that mean? We're decreasing the liability, or we're paying for that debt. Now, FICA OESDI payable includes what in it? It includes the deduction that we took from the employee's paycheck, correct? Did we take it from each employee? And it includes the amount that the employer also has to pay for that employee. So it really gets hit hard. And for the purposes of your assignments, it means doubling the amount that you normally see, the 6.2%. Now, what about Medicare? Again, both of them. We deduct it from the employee's paycheck, and the employer also has to match it. So it's getting paid from both places. So when we go to pay for it, it's going to look like it's doubled the amount that we took from the employee. And FIT. Who pays for this one? Just the employee. Does the employer match it? No. So the FIT payable is going to be only what was deducted from the employee's paycheck. And once those have all been added up, you go ahead and write your check, and that's the payment of them. So those liabilities are now gone because we're paying for them with cash. Could be we'd use the account payroll cash if you had that account. But otherwise, just the account cash is used. Now, we talked a little bit last time about workers' compensation insurance. And remember I said this is something that's usually prepaid in advance, and it's based on how much you estimate your payroll to be for the year. So, when you go to pay it, you're going to do something called prepaid workers' compensation insurance, and then credit cash, or you may do it something different. If it's a prepaid account, what must we do periodically? Adjust it, because we've used it. So as we use those months of insurance, we have to adjust it. So a lot of companies, instead of using adjusting entries, will just expense it out right at the beginning because they know they're probably going to use it. So it could be done either way, but they will show you how when you do your assignments. But again, once it's paid, it just comes directly out of cash. It's just an insurance that protects your business against what type of claims? Injury claims. On-the-job injury claims.